please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. You're still with us here on Markets Today Talk Back. Absolutely flattish kind of day with large stocks on both sides of the spectrum, up and down. So didn't really go anywhere, the market. We got through 3 of the top 5 headlines that we get to you, which defined the day. Here's the 4th one. This is essentially the focus on laggards. Tata Motors lost ground in trade today. The stock was down 2%. The weak JLR sales in US, coupled with a Financial Times report that a hard Brexit could cost the company more than £1 billion a year in tariffs, weighed on the stock. Titan was also lower. The stock ended over 5% in the red. This came after the management of the company reported muted jewelry sales growth for the first quarter of FY19 due to weak demand and high base. Mangalam is here standing by to wrap out both those things, especially focused on Titan. Mangalam, over to you.
Titan was lower in trade today after the company gave an update on its first quarter performance to the exchanges yesterday post markets, and the mainstay of the company, the jewelry business, they said that saw a muted performance, and that was on account of 2 reasons. The first one was there was a weak demand, especially coming in from the adornment segment, and secondly the high base. Remember, first quarter FY18 we saw preponed sales coming in from GST as well as a one-off, which led to jewelry segment growing at upwards of 50%. 54% is the revenue growth that the company's jewelry segment posted in the first quarter of FY18. So on that high base, along with a muted demand sentiment, the company saw some weak performance in their jewelry business. That is something the street did not like. However, they did not change any guidance for the year going forward and still maintain their long-term guidance. So that is something we'll have to watch out for. Watches business did well, especially both in their traditional as well as e-commerce channels. They've opened 10 Tanishq stores in this quarter. So going forward, that is something we'll have to watch out for, and the street is definitely watching out for this stock, especially after its 16-17% decline from its record high. Now it trades at 35 times FY20 earnings. So let's see what happens to Titan going forward from here.
Yes, thank you very much for that, Mangalam. One thought that after the sale by Rakesh Jhunjhunwala, the overhang was done and it was bouncing from its 200-day moving average, but today's news took it lower. Other people seem to have the same questions. Rupesh Kulkarni is holding 5,000 shares of Titan, which he had purchased at 650 rupees. I shouldn't be complaining. He's been holding it for a year. He's a short-term investor. Should he hold or should he sell? Well, short term, so I'll ask first Mitesh, what should he do?
Lata, I think the stock has clearly got into a corrective mode after that big sell-off and the news, but also the fact that technically the stock has kind of, taken a breather from its uptrend. I think the stock will head towards levels of around 790, which is a very good medium-term support area. So give and take 5 rupees. I would suggest he hold the stock with a stop loss just below 790, 785, 780 could be a good level. And I think, on a bounce back, I think try to exit the stock closer to about levels of 930, 950. I think the stock will possibly now go into a long consolidation, having run up from levels of 300 to about 950 in a year. I think clearly that the signs of and signals of an uptrend are over, but the best we can hope for is a bounce back from that big support coming in at about 790, 95 zones.
Okay, and Deepan, you just spoke well of that stock, but 1,000 has been a near-term high.
Yeah, I know, and it may be difficult to cross that figure at least in the next couple of quarters or so. But do keep in mind that we are seeing a decent upswing in consumer spending, and if the monsoons are good, then we generally have a good wedding season, and wedding season tends to benefit Titan, considering that they are now having offerings over there as well. And what we are seeing is minor downswing traditionally in a stock where there's a secular growth phase. So I don't think there's much to worry about. In fact, if you missed out on buying on Titan in the earlier quarters or years when the stock was just moving one way up, this period where there could be a underperformance is a good opportunity to get into Titan. And I think there's somewhat a margin of safety considering the kind of correction which has taken place. Valuations also have come off a little bit from the highs that they were quoting at earlier. So we remain positive on the long-term story as far as Titan is concerned. And it's good that the management is guiding towards a soft quarter for the June quarter. and it kind of pairs the expectation which is there in the stock, which is quite nice. I think it's well received, and I think more broadly discounted as well.
Okay, so that is Titan. We got a question on Tata Motors. Rajesh wants to buy 50 shares of Tata Motors, and he wants to know when is the good time to do it. I mean, the stock is down 40% this year. 263. It's almost at the Feb 2016 lows. Deepan, what would you tell him?
I would advise him against buying Tata Motors, considering all the uncertainties surrounding JLR and Brexit, and there's also the fact that the capital expenditure plan of JLR was not very well received by investors, and does show that there is intense competition in the segments that it is operating in, which is why it is required to spend additionally on new models and on new factories and so on and so forth. So I would like to avoid Tata Motors at this point of time. No doubt domestic operations are looking up, but then I think JLR is such a large portion of Tata Motors valuation and consolidated P&L balance sheet that what happens in JLR in fact dictates the stock price of Tata Motors. I think there are far better choices in the auto industry, which is a great area for investment from an investor's perspective, and one should certainly look at stocks like say Maruti or Eicher Motors or even a TVS Motors. I think would offer a higher return over a medium to long term than Tata Motors.
Fair point. Can't argue with that. Well, let's go to the fifth headline and the last headline. But the most important, Reliance Industries made a big splash at its 41st annual general meeting. It announced the launch of broadband services business called Jio GigaFiber, or GigaFiber, sorry, and a higher-end feature phone called JioPhone 2, costing about 2,999. Stocks of broadband players like Hathway Cable, Den Networks and Dish TV significantly lower on the back of that announcement, because now this GigaFiber enters the home and becomes a means to start your television channels. Well, first let's listen to what the big man from Reliance Chairman Mukesh Ambani had to say at the AGM.
Company has already invested over 250,000 crores for creating state-of-the-art digital infrastructure to provide mobile and broadband connectivity across the country with the largest fiber footprint. We will now extend this fiber connectivity to homes, merchants, small and medium enterprises and large enterprises simultaneously across 1,100 cities to offer the most advanced fiber-based broadband connectivity solutions. We are calling this fiber-based broadband service the Jio GigaFiber. Starting this Independence Day, August 15th, you can start registering your interest for Jio GigaFiber through both MyJio and Jio.com. We will prioritize our Jio GigaFiber rollout to those localities from where we receive the highest number of registrations. Jio GigaFiber will be the largest greenfield fixed-line broadband rollout anywhere in the world, with rollout happening in 1,100 cities of India simultaneously.
Okay, usual disclosures. Reliance Industries owns Network 18 and TV18, the companies which operate CNBC TV18. And RIL, of course, which is the promoter of Reliance Jio, also owns and controls Network 18, which owns CNBC TV18. Well, with that, we go to the questions.
Oh, yeah. So Kuldeep Vora has got 3,300 shares of Reliance. His cost is 830 rupees each. He's been holding the stock for the last 2 years and wants to know whether he should hold or sell. Mitesh, your reaction first?
I think if the time horizon is large enough, I would clearly suggest hold. I think, the stock has now on multiple occasions peaked out around this 1,015.20 to about 1,030 on the upside, but eventually a breakout will happen. The stock has been broadly doing a range of about 900 to about 1,020.30, and once it breaks on the upside, because the long-term indicator is still pointing up, I suspect this stock should get past 1,100 very soon and possibly even make a higher level. So I would definitely advise a hold.
All right. Actually, we don't have the time to go to Deepan, so that question on another day. Deepan and Mitesh, thank you very much for joining us, and all of you on Markets Today Talk Back.